Hey everyone, welcome to the Successful Finance Journey. Today we're diving into a fundamental question for anyone new to investing. What exactly are stocks and shares, and how can you start investing in them today? Stick around because by the end of this video, you'll be ready to take your first steps into the world of stock investing. All right, let's start with the basics. You've probably heard people talk about buying stocks or shares in companies like Apple, Google, or even local banks. But what do those words really mean? In simple terms, a stock or share represents ownership in a company. When you buy shares of a company, you're essentially buying a small piece of that company. Imagine a company as a big pizza. Each slice represents a share. The more slices you own, the larger your share of the company. Here are a few reasons why people buy shares and why you should too. First, it is about the profit potential. If the company grows and makes money, the value of its shares tends to go up. That means the shares you own could be worth more than what you paid for them. Imagine you bought a share of a company for £1 and few years after, that same share is now worth £8. Second reason is as a cash flow dividend. Some companies pay a portion of their profits to shareholders in the form of dividends. It's like a little thank you payment for investing in them. This is why I personally buy shares. I love to see those dividends trickle in. And of course, I try to keep you updated of my dividends, so stick to the channel and let's grow together. Also, though not very popular, buying shares could offer you voting rights in some company. You get a say in the company's big decisions. It's like being a small partner in the business. Now, let's get into the steps for actually buying stocks and becoming a shareholder. Here's a simple roadmap to get you started today. Step 1. Set your investment goals. Before jumping in, think about your investment goals. Are you investing for the long term, maybe for retirement, or are you looking for more short-term gains? Knowing this will help guide your choices when picking stocks. Step 2. Understand your risk tolerance. Next, you'll want to assess your risk tolerance. Risk tolerance is simply how much risk you're comfortable taking with your investments. Are you someone who doesn't mind ups and downs in the market? Or do you prefer stability, even if that means potentially lower returns? For example, younger investors might have a higher risk tolerance since they have more time to recover from market fluctuations, while someone nearing retirement may prefer safer, less volatile options. Knowing your comfort level with risk is essential when choosing which stocks to invest in. Step 3. Choose a brokerage account. To buy shares, you'll need a brokerage account. A brokerage is like a store where you can buy and sell stocks. In the UK, popular options include platforms like Hargreaves Lansdown, Interactive Investor, and Trading 212. In Nigeria, there are platforms like Stanbic IBTC Stockbrokers, Cardinal Stone, and Meristem that make it easy to start investing with just your smartphone. Step 4. Do some research. Now, don't worry if research sounds intimidating. It can be as simple as looking at what the company does, how it makes money, and if it's growing. Some people like to start by investing in companies they already know, trust, and patronize. For example, why do you own an iPhone? Shouldn't you want to be a part owner of the company and get some dividend when they make profit? Step 5. Decide how much you want to invest. Remember, you don't need a fortune to start. Most platforms allow you to buy fractional shares, meaning you can invest just a few pounds or naira to get started. Start with an amount you're comfortable with and plan to add to your investments over time. Remember, consistency is key here, so give yourself time to grow. Start early. Investing in stocks is not a get-rich-quick scheme, so be patient. Like other investments, stocks also have benefits as well as negatives to it, so let us look at some. For pros, you have potential for high returns. As already mentioned, stocks can grow in value, meaning your investment could grow over time. In 2020, during the pandemic, I bought a Nigerian stock, Guinness, for 17 naira, and by 2021 I sold it for upward of 35 naira, making more than 100% profit. Same stock continued to grow to more than 100 naira over the next few months after I sold. Yes, I know, sold too early, but could have gone the other way too, so no regrets. Next, and I love this one, you make passive income through dividends. Many companies pay dividends, providing you with regular income. I buy only dividend-paying stocks. For cons, there is risk of loss. Stock prices can go down as well as up, so there's always a chance of losing money. That is why you need to be smart and invest money you can afford to let go. Do not use your fees, rent, or loan to invest in the stock market. You can earmark 5 to 10% of your monthly earnings as your investment. Similarly, there is market fluctuations. Stocks are sensitive to market conditions, so prices can be unpredictable in the short term. You cannot time the market, so it is best to invest regularly, preferable on a certain day of the month. If you regularly buy a stock, say on a monthly basis, the price will average over time. Investing in stocks is one of the best ways to grow your wealth over time, passively, but it's important to understand that it comes with risks. Start small, learn as you go, and remember, investing is a journey, not a race. The key is to stay consistent and keep learning. If this sounds exciting to you, why not give it a try? Set up a brokerage account, start with a small amount, and watch how your money can work for you. Let's journey together and share our progress. Thanks for watching, and if you're ready to take your first steps in the world of stocks, leave a comment below. Also, don't forget to subscribe for more tips on the successful finance journey. Remember, success is a journey, and it all starts with that first step. To your success, I'm out.